Steve Peterson here with Infinity Investments, and welcome to our channel where we talk all things commercial and investment real estate, particularly for the investor and professional in mind. And in today's video, we'll be talking about the top 3 mistakes that I see sellers make when they decide to sell their investment property. And believe me, y'all, there's more than these, but these are just the top 3 as I sat down and pondered, how to efficiently sell property more. I see these things popping up consistently, and I have one bonus for you at the end. You gotta stay with me. So if you like this kind of content, please subscribe, stay tapped into what we do, and we're gonna keep delivering it for you. So first mistake that I see people make on a consistent basis is not preparing a clear, organized set of financials for the listing agent to prepare and spread out to the marketplace. This is the number one thing that sellers don't do consistently. And when sellers give you clear financials, clear rent roll, clear leases, a clear package that allows the property to get presented in a much better fashion. Now, a big part of this is having the right agent on your team. Now, and I say that lightly because being that right agent, I feel like I am as a broker. I'm working for people, yet and still, sometimes it's hard as heck getting financials out of the seller. And that should be like the number one thing that you want to provide your agent. You want to provide anybody that's looking at your property. So that requires you, while you're owning the property, to keep good books. And if you have a property manager, they will provide that for you. If you don't, you got to make sure that you keep good books. And if you have an expert broker, they're going to take the information that you provide to them, put in a really good quality offering memorandum, also known as a marketing package, and they're going to have a nice due diligence package for anyone wanting to inquire about the property. This is huge. This is a huge mistake that people make when selling commercial investment property, particularly investment property that is purely for investment, not owner-occupied real estate, because the investor, the buyer, the investor buying the property is simply buying it for the investment value that it presents, i.e. the financials, basically the stream of income, the current income, historical income, and the future projected income that they have to look towards. So if the numbers are all over the place, if they're non-existent, if they're unorganized, if they're not present, then that's gonna just make investors hesitant. That's going to make investors wary, and that's not gonna help you to get top dollar. So you really want to make sure before you even go to market that you have a thorough financial package with leases, rent rolls, as much information you can provide the agent to about your property so that they can go out and do an excellent job of marketing it. So that's really, really important. And I would say about this, if you're going to list your property, make sure you hire an expert broker in that field. So someone who specializes in multifamily in a particular area, or somebody who specializes in retail or industrial, or somebody who specializes in small to mid-sized investment property. When you're working with an expert, when you're working with a specialist, that it's just, you're gonna have a better experience and they're gonna get you more money. And if you're doing an exchange, they're gonna help you out with that. But number one, biggest mistake I see people make is not preparing an adequate financial package. Now, number 2, it sounds like it's residential, but this definitely applies to commercial real estate, is not doing the cosmetic, curb appeal, visual upgrades that need to be done prior to sale. I'm not saying you need to spend an arm and a leg, but a fresh coat of paint, it goes a long way. Even if you're selling an industrial property, it just gives the, perception that this is a first-class operation. And you want to give that to your property. Again, you don't need to spend an arm and a leg, but you want to, it's about presentation. You want to present your property in the right way. If that just means cleaning it up, cutting some of the grass around the front, and believe this is not just for multifamily property. I see this with all property types. Like I mentioned industrial because it's the truth. Can you imagine if you pulled up on an industrial property and the roof looked like it's about to cave in, and there's just a horrible flaky paint out there, a lead-based paint hanging off the walls, versus a building freshly painted, swept up clean. Your perception as that buyer is you're going to perceive more value for that property that looks better. And a lot of people in commercial real estate, for whatever reason, forget about this. But the best sellers out there and the best brokers that I see, they make sure the property is presentable so that the look and the numbers match up with the value that has been presented, hopefully, in that package. So very, very important. I think in residential real estate, I don't see that as that big of an issue. Most people address that. But in commercial real estate, an investment property, people somehow forget that curb appeal is still important in all factions of real estate. So make sure your building shines. You don't need to spin an arm and a leg. You need to just pressure. Most people, if you just pressure washed it, that's gonna be half the battle right there. But spend a little bit of time, attention, and diligence into preparing your property so that it sparkles, so that especially if you got good numbers. You don't want anything taken away from the numerical value of your property, because people's perception is still reality in the sense that, if you got a whooped looking building, that's going to diminish the numbers. If you have a sparkling building, that puts a higher value on the numbers. So just make sure that you make your property presentable, even when it's a commercial investment property, so that all things are congruent. Now, the third biggest mistake I see when investors decide to sell their commercial investment property is not knowing why they're selling it. That's right. Most people don't know why they're selling. And why is this important? I think in a robust market where you're going to get multiple offers and sell above all cap, no big deal. You hit a market where, and like we've been in the pandemic, commercial real estate, where, hey, maybe the property may sit for a while. Maybe you may have to discount the price. Maybe you might have to carry financing or do something, that you don't want to do in order to sell that property. It behooves you to have a real clear understanding of why I'm selling this property, right? And what will help you to figure that out is to write down, hey, I'm selling this property, the top 3 reasons why I'm selling this property. And make a lot of money should not be that reason, all right? I mean, that can, be a part of it, but it's to make a lot of money to do what, very important. Now, within that calculation or within that process of thought, you should have what's called a calculation of what return are you making on your existing equity. What's your return on your equity? Now, I've got other videos where I break down how to calculate return on equity, but you want to know how much money you're making on the equity that you have in the property. Because if you're going to reinvest, that is the capital you have, especially if you're doing a 1031 exchange, that is the capital you have to reinvest with. So if you're making 1% on your equity, you probably, with reasonable expectation, you can go out there and buy a 4% cap rate. And if you got a 3% interest rate, you're making a lot more money than you were making on, with your existing property. If you're making, let's say, 10% on your equity, and you sell your building and you can look at only making 5%, well, now you're actually making less money. So you need to have that calculation done so you can figure out what's your return on your equity to help you to make some investment decisions and to help you to see what your bottom line is on your sales price. Because you may have a number in mind and may or may not be able to achieve that. And for you to make a decision whether you should sell or not sell should be based on some mathematical formulas that you've sat down and thought through, not based on the heat of the moment, emotions. And again, a lot of people think in commercial real estate, it's not an emotional business, right? People get emotional when you start negotiating them on their price, especially something that they're building, they've been making money on and they've owned for years. So take the time to say, why are you selling this property? What's your return on equity? If you were to sell it, can you go out in the marketplace and make more money? Very, very important. You don't want to make the mistake of just saying, hey, I'm just selling to make some money. Let's make money. Market's up, let's just make some money. Because then you might get tax problems. And here's the bonus that I was telling y'all about. A mistake people make when they're selling property is they don't have a clear criteria for their replacement property, right? A lot of people say, I'm going to sell my commercial investment property, and then I'm going to sell this property, and then I'm not going to go and do an exchange, or I am going to go and do an exchange, whatever, or let's say for instance, I'm gonna go do this exchange, but they haven't set forth that criteria for what that looks like, and then saw it in the marketplace if that criteria is realistic. So in other words, you just sell your property, make a ton of money, and then you're like, oh no, what are we gonna buy now? And either you buy something overpriced, or you don't buy and you pay capital gains. It might have been better off for you to keep that property in the first place. So the way you avoid that situation is to sit down up front before you even list it and say, I'm gonna do my exchange, here's my clear criteria for my replacement property, and then look into the marketplace and see is that realistic. If it's somewhat realistic, go after it and go get it. I hope this was helpful. Stay tapped in. We got more content like this coming. Throw me a like, throw me a dislike, tell me I'm crazy, tell me you like this, give me some feedback, man. Let's keep rocking and doing business. Thank you so much. God bless you. Subscribe, like, and best of success to your investing career. Thank you.